You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Thursday, 12th day of December 2024. 12/12/24. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. This is our second live broadcast of the day. The first live broadcast is our live training room. It's 2 hours every trading day from 9:30 a.m. to 11:30 a.m. Eastern. But that's private. Got to be a member or on the 1-week free trial. Now, if you haven't taken the 1-week free trial, when Michael comes on, he'll walk you through step by step how to take the trial. It's a piece of cake. You do it today, we'll get you indicators indicating today. Your trial will start tomorrow, which is a Friday, and you're like, oh man, that's okay. It'll run all the way through next Friday. Okay? So I just turned a 5-day free trial into a 8-day free trial. And the indicators are important over the weekend because with the TradingView platform, you have access to markets that never sleep. So, good times. Now, this broadcast, the one you're tuned into right now live, there's 2 different ways to join the afternoon broadcast. And you don't have to be a member. This broadcast is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. The best way to join, and I'm going to give you the best way first, go to mytradingiq.com. Scroll down to where it says Noon Broadcast. Click the link, fill out the 30-second registration form. It's going to log you right into our platform if we're live at the time. But more importantly, every trading day going forward, you're going to get an email about an hour before this broadcast starts. In that email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there's going to be days you're out of the office, away from the desktop, but you'd still like to join live. And some days you'll be busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember, youtube.com/CFRN. It's the Christian Financial Radio Network, but all you have to remember is CFRN, because you already got the YouTube part memorized. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting if you will, but we also archive each and every daily broadcast. Currently, there are over 2,700 daily episodes archived for your educational and viewing pleasure. YouTube.com/CFRN. And while you're there, be sure to hit the subscribe button, give us a thumbs up, tinkle that little bell. That way, anytime we go live, you'll be notified. On your phone, on your computer, you get a little pop-up, CFRN just went live. Follow me? That's a good thing. And it helps with the YouTube algorithm, and it helps more people find our channel. So, thank you for that. Now, our daily schedule, right here. Daily devotional, word of prayer, a little bit of news, a recap of the Logic 247 alerts, the concierge trade alerts, and then about 12:50 or 50 minutes into the broadcast, Michael will join us, give us a recap of what happened this morning in the live training room, and then we'll do some live trading on the TradingView platform for about a half an hour, and then I'll come back and wrap things up with our good word for the day. So with that, let's get into it. Now, we're in day 3 of 5 of this particular devotional topic. From humbug to hallelujah, a 5-day Christmas transformation. Our scripture today is Philippians 4, verses 8 through 14. Summing it all up, friends, and I'm sharing from the Message translation. Summing it all up, friends, I'd say you'll do best by filling your minds and meditating on things true, noble, reputable, authentic, compelling, gracious, the best, not the worst, the beautiful, not the ugly, things to praise, not things to curse. Put into practice what you learned from me, what you heard and saw and realized. Do that, and God, who makes everything work together, will work you into his most excellent harmonies. I'm glad in God, far happier than you would ever guess. Happy that you're again showing such strong concern for me. This scripture, by the way, is being written by Paul to the church at Philippi while he's in prison. Not that you ever quit praying and thinking about me. You just had no chance to show it. Actually, I don't have a sense of needing anything personally. I've learned by now to be quite content whatever my circumstances. I'm just as happy with little as with much as with little. I found the recipe for being happy, whether full or hungry, hands full or hands empty. Whatever I have, whatever I am, I can make it through anything in the one who makes me who I am. I don't mean that your help didn't mean a lot to me. It did. It was a beautiful thing that you came alongside me in my troubles. Searching for contentment. Ever feel restless? Jittery? Maybe your foot's tapping, your mind's wandering. Maybe you're checking your phone just, I don't know, to check it. In a world that celebrates a living in the moment, we struggle to truly stay present. The reality is that the present often feels uncomfortable or unsatisfying. And Scrooge knew this feeling well. As the ghost of Christmas present guides him through scenes of his current Christmas, Scrooge reacts with disdain. His nephew, Frederick's joyful party, the long line of hungry people waiting for soup, the humble but warm cheer within the Cratchit family home, none of it is enough for him. In Scrooge, we see a reflection of ourselves. Whether it's the frustration of not affording the newest gadget or the reluctance to attend yet another gathering, discontentment has a way of creeping into our hearts, especially around the holidays. And when we do find ourselves in those precious holiday moments, a candlelight service, a family gathering, or watching loved ones open their gifts, our minds often drift to what's next, or to all the things left on our to-do list. The message from the Ghost of Christmas Present is clear. Contentment isn't about what you're striving for or what you left behind. It's about choosing to fully embrace what you have today. These moments are a gift. That's why they call it the present. But they're temporary, fleeting, and also precious. The Apostle Paul captures this idea well in his letter to the Philippians. I've learned the secret of being content in any and every situation, whether well-fed or hungry, whether living in plenty or in want. I can do all things through him who gives me strength. Contentment is not about perfect circumstances. It's about seeing God's presence in every situation, no matter how humble or imperfect it may be. As we follow Scrooge's journey, God invites us to do the same, to find contentment in our now. We may not have everything we want, and life might not look the way we envision, but what if we sought joy in the little moments, in what is rather than what isn't? In those scenes, Scrooge witnessed the laughter at Frederick's party, the solidarity in the soup line, the love in Bob Cratchit's home. He was surrounded by joy he didn't recognize. And yet those blessings are there for us too, if we're willing to pause and be truly present. Pray with me. Heavenly Father, thank you for your love and faithfulness. Help us to fix our minds on what is true, noble, right, pure, lovely, and admirable. Strengthen us, God, to be content in every circumstance, trusting in your provision. Teach us to rely on Christ, who gives us strength in all things. May we walk in gratitude and faith, knowing you supply all of our needs according to your riches and glory. Thank you for being our ever-present help. It's in Jesus' name we believe and pray. And everybody said, amen. Amen and happy Thursday. Speaking of Thursday, that means we got a members only workshop tonight at 8 p.m. Eastern. Of course, the price of admission is you must be a member. Now, if you want to become a member, just send an email to support@cfrn.net. In the subject line, put, I want to become a member. In the body of the email, just put your name and phone number. We're not going to call you. We are going to send you an email that explains what it means to become a member, and then there'll be a link you can click to actually become a member. Try to make it as simple as we can. Okay? All right. Let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is down 43 points. NASDAQ is down 35. S&P 500 is down 8. And the Russell 2000, our man in the street, is down 20 points, which is almost 1%. In the commodity basket, crude oil down 24 cents, trading 70.05 last. Gold, wow, down $48.90, trading 27.0780 last. That's a drop of 1.75%. Silver, down $1.23, trading 31.73 last. That's a drop of 3.75%. And over $6,000 per contract traded. Yikes. In the Asian markets at the close, the Nikkei posted a gain of 476 points, 1.25%. The Shanghai rose 29, 1%, almost 1%. The Hang Seng gained 242 points, almost 1.25%. And in the European markets at the close, FTSE up 10, the DAX up 27, the CAC down 2. So we had a green day in Asia. It was a mixed day for the UK. And so far, it is a red radio Thursday here in the US of A. Now, as futures traders, we like to see all four of the major indices the same color. We don't care if they're red or green, because with futures, you can be long, short, and long again all in the same hour if that's what the chart in front of you is telling you to do. When they are the same color, all four of them, that's when you get your best follow through on your trades. So let's take a look at the news. Grocery chain Albertsons has abandoned a proposed $25 billion merger with Kroger and is now suing its rival for an alleged breach of contract. The termination ends a 2-year effort to combine the competitors into the largest supermarket in U.S. history, which would have controlled roughly 13% of the grocery market. Albertsons is seeking a $600 million termination fee and additional damages for legal expenses, as well as lost shareholder value. Albertsons alleges Kroger failed to make sufficient efforts to secure regulatory approval for the merger, including refusing to divest enough assets and ignoring regulators' feedback. Kroger denies the claims, contending Albertsons isn't entitled to the termination fee because Kroger fulfilled its end of the agreement. Boy, they're going to be hashing this out in the courts for a long time. Malibu is on fire, and not in a good way. The Franklin Fire in Malibu, California, has burned roughly 4,000 acres of land and is only 7% contained. It has destroyed and damaged over 15 structures and placed roughly 20,000 people under evacuation orders, including celebrities like Cher and Dick Van Dyke. You know, I didn't even know Dick was still with us. Nearly 60,000 people have lost electricity. The fire erupted late Monday evening as a brush fire north of Pepperdine University. The cause is still under investigation. Unusually dry mountains and grass have fueled recent wildfires in Southern California. The Franklin fire has been further fueled by strong winds and low levels of humidity, creating red flag conditions and propelling the fire towards Malibu and the Pacific Ocean. Man, Malibu, it's either on fire or it's sliding into the ocean. But boy, do people pay big bucks to live there. Kind of strange, huh? Well, I know you've heard lots about these drones over New Jersey. Let me ask you a question. Could you resist shooting one of those down? Could you? Now, I know it's illegal to discharge a firearm in the city limits of most cities. Okay. So I take my rifle and I go outside of town in the woods where you can fire your weapon. And I would do my best to shoot one of those things down and see what it is. I mean, the Pentagon, our government, oh, we don't know what it is. We don't know what it is. The government, all the Fed, everybody, local officials, don't know what it is. Don't know what it is. I can't believe some guy in Texas hasn't gotten in his pickup truck with his rifle rack loaded and made the drive to New Jersey just for that purpose. I mean, there was like 180 sightings the other night. Now, one theory is that Iran has a mothership somewhere off the East Coast and that they're releasing these drones. But the government says that's not true. I don't know what credentials the guy on the news last night had who gave his theory, but I want to know. So I don't know. Couldn't they just like hit it with a stun gun or something? So I mean, these things are big. From what I heard, they're like the size of a car. So if there's people inside or alien beings, I don't want to hurt them. Okay. But I want to know what they're up to. I don't think I've ever even been to New Jersey. Okay, to the markets. Wholesale prices rose more than expected in November, adding to a string of sticky inflation prints. Today's report from the Bureau of Labor Statistics showed that its Producer Price Index, the PPI, which tracks the price changes companies see, rose 3% from the year prior, up from the 2.4% in October, and above the 2.6% increase economists had projected. This marked the highest year-over-year increase since February of 2023. On a monthly basis, prices increased 0.4% compared to the 0.2% seen in October. Excluding food and energy, because we don't use those, core prices increased 3.4% year over year. From Bloomberg, British hedge fund trader Sanjay Shah was sentenced to 12 years in prison by Danish judges for orchestrating a billion-dollar tax scam. Excuse me, I have something in my throat. I hope it's not alive. Okay. Now, this is the heaviest jail term handed down so far in Europe's sprawling cum-ex trading scandal. That's spelled cum-ex. A Danish district court today convicted the Solo Capital founder of serious fraud for creating a scheme that duped the Nordic nation's treasury out of more than 9 billion kroner, which is about 1.3 billion US dollars, through thousands of sham dividend tax refund applications between 2012 and 2015. Shaw, who arrived in court wearing a Christmas elf hat, wow, immediately appealed the decision. He has consistently denied any wrongdoing, claiming he merely took advantage of legal loopholes. The court ruled to keep Shaw in jail while the appeal is processed, saying he was a flight risk. Shaw has protested this claim, arguing he should be allowed to return to London to be closer to relatives and attend a London civil case against him in person. The trader has been held in custody since he was extradited to Denmark from Dubai a year ago. God, that's all way above my pay grade. Gold sadly extended its decline after mixed U.S. data prompted investors to book profits following the metal's 4-day advance. U.S. wholesale inflation unexpectedly accelerated in November on a surge in egg prices, while other categories suggested a muted increase in the Federal Reserve's preferred price gauge. Meanwhile, applications for U.S. unemployment benefits rose to a 2-month high last week. And those unemployment numbers are going to soar because when Trump takes office and Elon and his sidekick start shutting down government agencies that are just burning up tax dollars, there's going to be a whole lot of people looking for work. And it's going to be a really humbling experience because you've got these career bureaucrats. They don't know how to do anything but shuffle paper, right? Now they're going to have to go out and get a job, one where you actually have to show up. Remember, most of these bureaucrats have been working from home since the pandemic. The pandemic's been over for a while. So they've kind of proven that they're not needed. And a lot of them are threatening, oh, if they do that, I'll quit. Go ahead. You're going to get fired anyway. At least if you quit, we don't have to pay you unemployment. There you go. All right, one last bit of news. The FAA administrator, Mike Whitaker, has said he will step down on Inauguration Day. Well, been nice knowing you, Mike. All right, let's bring it home. Logic 247. That is our 24/7, around-the-clock E-mini alert service. But it's not just the E-minis. It's also crude, gold, silver, bonds. We're in week 332 of Logic 247. And over those 332 weeks, we've issued over 18,600 individual handcrafted alerts. And we've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. So, am I saying that I send out alerts to our members with an entry price, an initial target, and quite often additional targets, and a final trade to target before it actually happens? That's exactly what I'm saying. That's the lowest hanging fruit you're ever going to find. But the purpose of the logic alerts is not for you to just trade them, but to use them to learn how to read a chart, so that someday you can laugh and go, I don't need Dwayne's alerts. I can read a chart myself. See, that's what we want for you. And if you want to become a consistently profitable trader, there's no way that's going to happen until you learn how to read the charts. So, anyway, Valerie did this recap this morning at 6:30 a.m. Eastern. Some things have changed since then, and I've issued some additional alerts. But at the time she did the recap, since the markets opened Sunday night at 6 p.m. Eastern, we'd issued 52 total alerts. One never triggered. We were still waiting on 10. That gave us 41 actionable alerts, of which 3 or 7% would have been stopped out, again based on market structure and that very simple process that we teach all of our passport holders. So in other words, I gave our members play-by-play instructions on 52 separate alerts, of which 41 have triggered at the time of this recap, of which 3 got stopped out. 7%. Our weekly average, again, over the last 332 weeks and 18,600 plus alerts is 20% or less. So, if I don't screw it up, we'll have a good week. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Our original alert service, which is much older than Logic 247, they're a little bit different. Instead of coming out around the clock, they're posted as a static report shortly after the Globex open each evening. And I was late last night. Tuesday night, I got them out at 6 p.m. Eastern. Monday night, I got them out at 6 p.m. Eastern. That's when the Globex session opens. I got them out right at the open, 2 nights in a row. But last night, I was a little late. That happens. So what I'm saying is, at 7:10 Eastern last night, every one of our members and trial members had every one of these targets. S&P 500 E-mini, the Dow, the Russell, crude oil, the NASDAQ, gold, silver, and bonds. So with that, we can go to the charts. And we'll start where we do with the daily chart. Why the daily chart? Because institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why? Account size. A lot of these institutional traders have accounts in the hundreds of millions, billions, even trillions of dollars. When they trade in the size they trade in, they're the ones who move price, not me and you. So, whether you trade futures or stocks or crypto or Forex or ETFs, if you'll spend 2 minutes with the daily chart before you start trading on your smaller time frames, number one, you get a free look over the shoulder of the deep pockets that move price, but you're also able to identify where major areas of support and resistance are. Now, if you were tuned in yesterday, we clearly said that because blue and climbing had gotten directly above price, that was probably going to be good resistance. I did say it could break through and put in a new all-time historic high, but based on a lot of years of history, what happened is what we would expect to happen. Now we're sitting on top of the step line, which is potential support. The next major support is at the 62% fib extension, and then the daily BBC, and then the 50% fib extension. When you look at your smaller time frames, you can't gather all that information. Okay? So 2 minutes, identify the major areas of support and resistance, and then go do your trading with that knowledge in the back of your mind. Now the green line is called the BBC, stands for bull bear cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses above the green line, we're bullish and expect higher prices. Lower prices, higher prices. Now the pullback to the BBC holds more often than it doesn't, whether it's pulling from below or pulling from above. Now we know eventually it'll trade through. Okay. But look at this, 1, 2, 3, 4, 5 days the pullback held. Now we've basically been going sideways for 1, 2, 3, 4, 5, 6, 7 trading sessions. So what's happening is the BBC is rising to meet price, as opposed to price dropping. See how price just dropped over a couple days right to the BBC, and then we got a big bounce? Typically, when we get this kind of a move, the BBC rising to price doesn't give us that same kind of bounce. It can, but it's a different dynamic. Okay? Now the markets are fractal in nature, which means you can put the BBC on a daily chart, a weekly chart, a monthly chart, 30-minute chart, a 5-minute chart, a tick chart, or a range chart. It's going to give you the same information. Price gets above the green line, expect higher prices relative to the time frame you're looking at. Price gets below the green line, expect lower prices relative to whatever time frame you're looking at. In other words, don't expect daily results from a 1-minute chart or vice versa. Now, this is an interesting chart. All alerts are created on the 30-minute chart. Okay? Nothing magic about 30 minutes. It's just the time frame I chose many years ago. And if it's not broke, they say leave it alone. So I have. The vertical lines here separate today, Thursday, from Wednesday, from Tuesday. When price drops to a weekly zone, we expect support until proven otherwise. When price rallies up to a weekly zone, we expect resistance until proven otherwise. When price encounters a weekly zone, 70% of the time you're going to get consolidation. 20% of the time rejection, 10% of the time the slice. Now, when you get the slice, see how this 30-minute candle sliced through the zone like it wasn't even there? When it ran out of steam, it retraced to the zone it sliced through and continued in the direction of the slice. And yesterday afternoon, when we hit this zone and the step line crossed from the left side to the right side of blue and climbing, we reverted to the mean. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. And the pullback holds more often than not, whether you're pulling from below, pulling from above. This is just bizarre how many hours we consolidated here, but we did manage to reach down and hit the short target once, twice, but this is just some really sedated movement. The Dow, we opened here below the BBC, so we naturally expect lower prices. And we came right down to, we missed hitting the target by 3 ticks. Over here, what did we miss it by? The low, missed it by about 14 ticks over here. And then we finally hit it over here. But red and falling turned to blue and climbing, and that put us above the BBC. So now we anticipate higher prices, which we got. Nothing to write home about. And on a 30-minute chart, you don't see the reason for that resistance. Now you can go play with time frames and find a reason, but don't do that. Okay? Pick a time frame and stay with it. Nothing's going to be right 100% of the time. But market structure, it won't let you down. So we hit resistance here for whatever reason. What time was it? 9:30? That was a Wall Street open. So we ran up and ran back down and hit the short target. Again, bounced up to the BBC, the pullback held with red and falling overhead, and that sent us back down to the target. Now, the fact that we've got red and falling overhead and we're below the BBC, I suspect we might make it down to this zone by the end of the session. That would be 43,950/55. The Russell opened right at a zone and consolidated, but we're below the BBC. So what do we expect? Lower prices. And there we go. And there we go. And then we spike the zone, and then we spike the zone, and then we finally close below the zone, bounce up into red and falling and the zone, both resistance, potential resistance, and that sent us back down to where we are now. You have to scroll way back, but if you scroll way back, market structure will tell you why price stopped here. Okay? In Q, here's where we opened between the zones and above the BBC, but below red and falling. So more consolidation until we finally dropped to the zone, bounced up to resistance. Then we get a leg, bounce up to the BBC again, another leg, another bounce, and we never did quite hit that short target. We would have had to get above this zone to envision hitting the long target. Okay. But once we're below the BBC, like this candle here, or this candle here, This candle closed here and it opened here and it went all the way down to here before it reversed and went back up to resistance. So there's plenty of room to get your goal for the day. Crude. This was the opening candle last night. We dropped almost to the BBC, but buyers saw an opportunity and took us right up to the long target. Resistance sends us to support, blue and climbing, which sends us to resistance. And again, you'd have to scroll very far left and you'll find the reason why price stopped climbing here. Then price gets below the BBC after some consolidation. We go all the way down to the short target. Now, this low is just above this low. That's buyers coming in early, and they ran it right up to the target. Overshot it a little bit. 3 ticks. So, whether it was on the long side or the short side, I mean, what a beautiful trade this was here. Once you cleared this low, let's call it 70 bucks. 70 bucks down to that's $550 per contract traded. Yeah. If you've earned the right to trade 10 contracts, that's $5,500. So gold, here's where we opened, ran up, hit the long target, exceeded it by how much? We exceeded it by $130 per contract. Now this one candle right here opened at 27.55. Let's just call it 0.4. Let's just call it 56. It ran up $270 per contract traded, that one green candle. Okay. Then we consolidate along the BBC. Blue and climbing turns to red and falling. We get a bearish cross here. Okay. So we come down to the zone. Now this is the highest weekly zone, and you'll remember yesterday we were above the highest weekly zone during the broadcast. I said, however, based on the 15 years of history, we've published on the 14th of this month, Saturday. Saturday will mark 15 years since we started publishing the zones. Once the zones are published, Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. If you missed yesterday's broadcast, you should go listen to it. Because I said, even though we're above the highest weekly trading zone, by close of business on Friday, we expect to be at or below the highest weekly zone. And here we are. Now, could we end up back above the highest zone by close of business tomorrow? Yeah, you got to embrace all possibilities. In fact, on the way down, check this out. This one candle right here, just to give you an idea. It opened at 27.26 and it dropped to 27.08. It's $1,400 per contract traded in that one candle per contract. But you see how on the way down you had price, step line, red and falling, BBC's way over here. Now what's changed? The step line was on the left side of red and falling, but now it's on the right side. What does that tell us? That price is going to attempt to rally up to the BBC, which we expect to be resistance till proven otherwise, which will then give us another leg to the downside. Silver. Gosh, what a wild ride. From 33.33 to 32.33. That's $5,000 per contract traded. 32.33 to 32.33. $5,000 per contract traded. And again, the step line has crossed, so we'll probably get a rally back up to the BBC. But imagine being in that trade. Now, silver's probably not for beginners. Margins are high. It'll just sit still for a long time and then all of a sudden make a fast move. So you might want to, get your chops on something a little milder, crude or the S&P. But silver's always there. Some days we get these huge moves. Now, for people who hold physical silver, this is a very dismal chart. But for someone who's simply day trading silver, this is suitable for framing. If you're on the right side of the trade. Remember, once price gets below the BBC, you're only thinking about shorts. When price gets above the BBC, you're only thinking about longs. It only takes 2 pennies to get your goal for the day with silver. True story. 2 pennies. A $1 move is worth $5,000 per contract traded. So back to the daily chart. We know where resistance is overhead at blue and climbing because it's directly above price. We're sitting on top of support at the step line. Now we've been below it, but we're now sitting right on top of it. If by the end of the session we get back down to the 62, then I would figure, well, we got some high impact news tomorrow morning, so this little combination right here, the daily BBC and the 50% fib extension, it should be good for a nice bounce, unless there's some really bad high impact economic news tomorrow. Now, Michael should be here, but he's not. So, let me say what I normally say at the end. To become a member, send an email to support@cfrn.net. In the subject line, put, I want to become a member. In the body of the email, put your name and your phone number. We're not going to call you, but we are going to send you an email and give you all the information you need to make a well-informed, intelligent decision as to whether or not what we do is right for you. And then there'll be a link you can click to actually become a member and be in the members only workshop tonight. As a passport holder, you'll get 2 hours of live training every trading day. You'll also have access to private one-on-one mentoring at no extra charge. The strategy you learn, the indicators you own as a passport holder are fluid across all markets, all time frames. Futures, stocks, crypto, Forex, ETFs, doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. You'll also get the Logic 247 alerts around the clock. You get the concierge trade alerts every night, the second they're published. Every Monday morning at 6:15 a.m. Eastern, you'll get the weekly trading zones. and you'll be able to attend the members only workshop. Plus, you're going to get the golden key that opens all the private channels in Telegram. And one of those is where we put the recorded version of every members only workshop. So you'll have a ton of information at your fingertips. A gazillion teachable moments over the years. You got to go and watch them all? Nah, just show up for class every day, ask lots of questions, and you'll be just fine. Michael has arrived, so we're going to turn things over to him. He'll give us a recap of the live training room.
All right.
Wish that scam likely guy would lose my number.
And every time you block it, they just come back with a different one.
Yeah.
And just make up a new one.
Yeah. Okay. Your charts look marvelous.
All right. Well, then I will get started.
Yeah, and I got to go in the other room with my wife and get on this video conference thing.
Okay, you want me to just shut it down at the end when I'm done?
No. Oh, no, I'll come back and do the good word for the day.
Okay.
I don't want to get stuck on that conference call too long. Those things are so boring. And my wife gets so infuriated. So I'll see you in about 30 minutes.
Okay, sounds good. I will be here. All right, here we go. Good afternoon, everyone. Today is Thursday, the 12th day of December, 2024, 12/12/2024. 12/12/2024. Let's see. If you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. Just click on that purple button. And when you do, you will be sent to this registration page where all that we ask for is your name, your email, and your phone number. Down here at the bottom, if you have NinjaTrader and you want to use Ninja charts, the limited charts that we have on Ninja, give us your machine ID and we'll be able to set you up with that. You are going to want to get TradingView if you're going to take our trial and do everything with us. There's a free trial of TradingView, a 30-day free trial of TradingView. You're going to want to get TradingView if you're going to want to use our indicators, okay? Because that is where the primary indicators are. They're on TradingView. So here's your TradingView login ID right here. Now, if you don't have a TradingView login ID, you can go back here to our home page, go to Trading Platforms right here. Right here it says TradingView Platform. Click on this right here. Watch this video. It's 3 minutes long. Click down here to go to where you get the TradingView charts. Click on monthly, and it's $14.95 a month plus $7 a month for data. Okay, that's how you get the charts with real-time data. $14.95 a month plus $7 for data. You could get the free ones. You're going to have delayed data with the free ones. If you want to get real-time data with the free ones, it actually costs more than the combination of these. So $14.95 a month, and this is a free trial for a month anyway, so you get the free trial and the data and all that stuff. Anyway, that is how you take the free trial. Now, today we did, I put in the spreadsheet here just what it took to get the goal for the day. Okay, so today, the 12th day of December, 2024. If you're gonna read the spreadsheet, you gotta read all the CFTC risk disclosures down at the bottom. We got the goal for the day on our first NQ trade. We're up 48 ticks. So it took 6 minutes and one trade to get the goal for the day. And I just put one trade there for that. Now, what we did in addition to that was we got, using the divergence setup, we got another 28 ticks on the NQ. On the Russell, we got 24 ticks. On gold, we got 25 ticks. And on the ES, we got 10 ticks. So we got an additional $635 per contract using the divergence setup. Now, I didn't put that in the spreadsheet because I want to finish out probably the week anyway with the spreadsheet the way that it is. And I was thinking about finishing out the month and maybe the year with the spreadsheet the way that it is before I get into divergence trades. And then we could start the next year fresh with divergence trades is what I'm thinking. And then I'll add all this stuff into the spreadsheet. But so far, this is what it looks like. All right, maybe I'll just keep a separate tally going down here somewhere. It wouldn't be that hard to do. I can just keep a separate one going down there. And we'll keep all that going. I mean, I can do that pretty simply and just copy this right here. this bit of information from right here to right here. How many lines is that? 94 up to 22. So 26 lines. Copy, and we have 26 blank lines. Let's say we go from 40, we'd have to go to 76. Oh yeah, easy. I can just paste it right here. Paste it right there. And then start here and call this 1212. Right? And then delete the rest of this. So I can just keep a separate one going here with those results. Okay? And that's what I think I'll do. And then we'll carry out the year, getting our goal for the day and doing everything with the spreadsheet and the 24/20 plan. Not using divergence trades in the totals. Okay, but then I'll put the totals of the divergence trades down here as we get them. Okay, so I guess we can just delete these lines from here to here. Delete those rows, and there we go. All right, so on the month now, we're at $3,040 over 8 business days, averaging $380 per contract per 2-hour business day. We've gone 231 business days this year, getting our goal. And we have gone 4 days since our last non-green day. 1, 2, 3, 4, 5 days since our last non-green day. I guess I didn't update that. So this might not be updated either. We had 224, 25, 26, 27, 28, 29, 30, 31, 32. Okay, so this hasn't been updated. It should be 232. And that's a 4, and this should be 399. I guess I didn't do this morning. And this is probably a 9, right? 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, I didn't update this morning either. 9 there, and this would be 232. That's right. 231 out of 232. That's right. And this is 399. All right. So all those numbers are correct. So on the year now, we're at $115,107 with one contract over 232 business days, averaging $496 per contract per 2-hour business day. Now, doing the 24/20 blueprint, let me go over here. First, I don't have the question box open to see if anybody's asked a question yet. No questions. Okay. Doing the 24/20 blueprint. If you're to quit trading when you get the goal for the day and add one contract for every $2,000 you earn, which would be about one contract a month. So far this year, you would have only had to work 69.5 hours. If you did it just like me, 69.5 hours, and you would have averaged $3,173 per hour for those 69.5 hours. Okay. All right. So let's get into the actual trades. Now, it was the NQ that we started off with that first trade. So I'll start off with the NQ today. And a lot of the arrows that you can see on here were not arrows where we had trades. Right? Our very first trade on the NQ is where we got the goal for the day, and it was with the trend. And I don't know exactly where it was. What was it, 6 minutes? So it had to be somewhere in here. I think it was right here. Right here is where we got the goal for the day. It came out of the overbought. We had the ribbon spread. We got our goal for the day on the first trade right there. Right, 48 ticks. And after that, well, we did a lot of talking, all right. In here, I was using this to illustrate based on stuff I had drawn. I thought it was on the NQ that I had done all that. I don't know. But anyway, I was using this for training to go through stuff based on the divergence trade setup. Now, those of you guys that were not there this morning, you see the blue down here that's part of the TV trades range trigger. Yesterday, you may remember, I had done this, right? So that you could easily see when it's just the blue popping out. And those are the trades, or the blue leading the pop out right here. And that's where the trades trigger, right? That's what I had done yesterday. So after doing that and seeing that it helped people, I created this as part of the TV trades range trigger. It's called the cover. You have to turn it on. By default, it's not going to be on. You have to turn it on. And by default, these settings, which is going to be covered, 65 to minus 65, they're 75 to minus 75 is what they are by default. I made it 65 to minus 65 so I could see a little bit more. But here, this is the color. Now, if you want to totally black it out, then make that 100%, and it'll totally black it out. right? Except for the TV trades, not the TV trades, but the ultimate slingshot. If you highlight the ultimate slingshot, you can see what's going on. Now, I did it so that you could see better when price comes out of the, not so much with price, when the trigger, the blue one, comes out by itself and leads into the overbought or leads into the oversold, because that's when your entry happens. Okay, that's when the entry happens. So that's why I created that, so you could see that separately. But it's good to be able to see some of the stuff that's going on back there. You know, you don't have to focus on it. But when it's halfway down like this, it's good to see that you have separation, because you'll know that on the down close, this is going to lead it down there. And so you can get ready. You know, just be cognizant of it. You don't have to have a buy stop limit order waiting or a sell stop limit order waiting or anything like that. As a matter of fact, you shouldn't do that. You should wait until the bar closes and then put your order on at the open or better of the next bar. And I think, I don't know what I have on my screenshot here. All right, well, this was something that I was doing this morning. There was one screenshot that I did this morning where I was able to, well, like right here, for instance, right now. All right, you can see the separation is here, right? So that if this bar closes up, that you're going to have an opportunity to go short, right? Because you're going to have bearish separation right here. So if we get an up close on this bar, we're going to have an opportunity to go short. But if we get an up close on this bar, we're going to have momentum going up, right? So you don't want to have your order waiting to sell on an up close, because there's going to be momentum going up. So let the bar close, see where the open of the next bar is. Probably it's going to go further in to the overbought. Like right here would be your sell right now. This is the NQ, so you could sell right here at 38.25. Now, if I can find my NQ DOM, I will sell at 38.25. Here it is. And I will not sell at 38.25 because it's already moved down away from it, but it hasn't moved down enough. Well, now it has. But you could have sold right there at 38.25 is what you would have been trying to do, or near 38.25. All right, for the move down from right here. But being able to see this little bit behind the scenes here, you were able to see ahead of time that that's what you're going to be looking for. Now, usually this is going to go into the over. It's going to go up a little bit further. It's going to continue up a little bit further, and then you can put your order on and get ready for the trade and take it. This one right here, I didn't have time to put the order on and take it. As you can see, I didn't do it. I would have done it if I could have found my DOM in time. I'm long on the ES right now for some reason. Okay, this is why I'm long on the ES. All right, so here's the long on the ES. And I'm going to lock in, that looks like 12 ticks right there. Yeah, that's 12 ticks right there on the ES. Okay. So why did I go long? Because we had this right down here. All right, we oversold. So the open of that bar was a spot to get long. Now, I actually got long lower than that. Maybe I didn't get long from there. Oh, anyway, that's where you should have gotten long, right in here. Anywhere here or below would have been a good spot to get long. And that's all you have to do. You know, it's not hard. You can see the separation coming when it's coming. Like right here, there's none. You can see that, right? You want the blue line to lead. It doesn't have to be the blue line leading, but for argument's sake right now, for all intents and purposes, we'll let the blue line be the leading line. Okay. And let's click on this. Now, I just got to notice that we're going to have a big move, undertick move up on the NQ. We're not set up for a move up right here. Not right now. Okay, we were set up for that move down. We had a 100 tick move down right there that we were able to just take advantage of if you would have sold right there at the open. All right. Now the ES does have some separation right here. So this is a long trade from right here at the open of this bar was the long trade, right? Because of the separation that we had around the ES. That's what I was saying a minute ago. I'm still in that ES trade. Right there, I got my stop locked in 12 ticks. Now 15, 16 ticks. It looks like it's going to go up to 85.50. And that's worth pointing out also. All the stuff that we've done in the past, as far as targets go and leg lengths and all that, that is all still valid. The risk management strategies, all of that stays the same. Now, all I'm giving you is a better place to enter, right? A better spot to enter. That's all. So, all right here we have a little bit of separation, but the black is leading, so that's not going to turn in anything. Over here on the gold, we have separation and the blue is leading. So if you get an up close on this bar, that might give us a shorting opportunity. Okay, right here, we had this. I didn't expect this to happen. This up close right here, this was a shorting opportunity right here on the NQ. So you can short the NQ right now. Okay, I know it doesn't look like it, but this was a shorting opportunity right here on the up close of this bar where it separated this, put you in the over bar. The open of that bar was a spot to short at 24.75. You see, I had an opportunity to short at a better position here. So now you just got to wait. All right, wait for it to turn back down. And there it goes. Okay, I just got out of that ES trade with 15 ticks. So now you just got to wait for it to turn back down. And what you anticipate is that this is going to get back down here. Now these are 31 tick range bars. So it takes 2 bars to get from the overbought to the oversold. So there's a potential that it could take 2 complete bars and be 62 ticks, but that's not usually the way it works out. Usually it's going to be 1 bar and like 1.5 bars in ticks. Okay. But you see how this works, right? How you wait for it to open, then you get your order on there at the open or better. And so right now I'm going to start locking in profit on this. There's 4 ticks and we're just going to wait. This should make it all the way down here to the oversold. If it does, great. If it doesn't, well, now I got 12 ticks locked in on this. Okay. You see how easy that is? It should make it all the way down to the weekly trading zone. I think we're going to get all 48 ticks down here. It'll be 48. Okay, but I know I can lock in a lot more. 12 was there at 25.25, so we'll go all the way down to, no, we just got all 48 right there. Okay, so 48 ticks, that was $2,800 right there for me. You see how easy that was, right? You're able to see it. It pulled, it kept going. Usually that's going to be the case. Usually there's going to be a little bit more momentum that's going to push it a little bit further beyond the open. You can get your entry in there, get in the trade, and just start trailing it. The stop's the same. All this risk management stuff that I was showing you right here. The risk management stuff is on the trade rules page. All this risk management stuff is the same. I'm still using 31 tick range. I still have a 36 tick stop. I still trail it to break even after 4 points. I still have a 48 tick target. Okay, all that stuff is the same. And now it's easier for me to put the trades on and for you to watch me put the trades on now than it has been in the past. Because now this is, when it closes, you have more, like right here. I could have just done this one too. I could have just gone long right here. Now, normally we would not even think about doing that, right? Normally we'd never have thought going short right here. And we would not think about going long right here. Because the ribbon's all crunched up and you way down here and you don't have a higher swing. You don't have any reason to go long there. But if I would have just gotten another 48 ticks, another $2,800. So here in the last 10 minutes, I could have made $5 grand. Pretty easy. I made half that, but I could have made more. But you guys see, right? You see how easy it is, right? I mean, if you're in here and you're not a partner, you're not interested in becoming a partner, then you're not really interested in making money. That's pretty much what it's going to be. You're just in here to watch me do things. Let me entertain you and Dwayne. But if you haven't joined, I don't know why, honestly. All right. Well, anyway, that was kind of fun. We have 16 minutes left. So I think Dwayne's going to be back, and I hope he's going to be back because Jada said something went wrong, and I got to get out to her. So when he comes back at 1:30, hopefully he'll be able to come back at 1:30. But I won't leave you hanging. So right now, is this enough separation right here to go short? Well, it's separation. It's just a tiny bit. I'd rather see it be like this. I like this kind of separation in the trade. That's better. There was separation right here, we could have gone long on that open right there. Could have gone long. That would have gotten you the 48 ticks. You could argue there's a short right here, but this one over here on the ES is better. This one right here, I missed it, but it was right here at the open at 84.25. Okay, there's more separation there. Actually, would have been better if it went up a little higher too. You see, there's starting to get separation over here on the gold. You're getting separation here on the Russell. So there's potential for trades. Okay, there's potential for the trades in there. Right? You guys see it all, right? And this stuff that I drew right here, I don't know what market I drew this on. It might have been the Russell when I drew it, because I drew it on the actual chart itself, and then I took a picture of it, and then I went back to look at the chart. What time does that look like it was? Around 10:30. Go look at that. So the ES right here, the spot to short would have been the open of that bar right there. Okay, so let's blow the Russell up here, and we'll see if I can find that. Where did that? Oh, it's all right here. I didn't delete anything, so where the heck did I draw all that stuff? I can't tell what market that was. Was it the ES? There it was. It must have been this. Yeah, this is what it was right here, where I drew this stuff. Actually, that was after the fact. It was somewhere where I drew it, where you couldn't see it on price. But anyway, what I was showing in here, when I couldn't see price, it was like this. What I was showing is what you can see from the oscillators down here. You can see what to expect out of price just by looking at the oscillators. Okay. So let's just grab a random spot and I'll do it for you. Now, we actually don't have a trade right here on the ES. If you were going to go with the black being the lead, then you would be buying right here at the open if you're going to go with that. But we decided that we're just going to go with the blue for right now. And the black works too, but we're just going to go with the blue for right now. And over here, I said, this is just a tiny bit of separation, but you could have sold the open right there and you'd be in profit right now. Over here, the black is leading right now on the gold, so that's not going to be anything. Over here on the Russell, the blue is leading, so that could be something, but you have nothing over here on that. All right, Ronnie, thanks. Ronnie, are you in here right now? I see you just texted me. Ronnie's writing down questions that people ask over and over again. We're going to sit down and make a video and answer those questions. One of the questions is, how do you get these on top of each other? Right, and that's really simple. You go here like this, put the ultimate slingshot on, put the range trigger on, and then you grab either one of them, go to the three dots, and just move to the pane below. Put it right on top like that. Okay, that's all you have to do. You can mess with the scale if you want to. It puts a scale on each side. You can mess with the scale if you want to. I'm just going to leave it alone. It's not really worth messing with. Okay, all you gain is a little bit of space. All right, so this over here right now, if we were to get a down close on this bar on the Russell, this would be a place where you would never want to take a trade normally, right? If we put the context on, see the ribbon's all crunched up, you have lower highs, you have higher lows. This is a place where you'd never want to take a trade. However, with this trade, with this setup, you have the opportunity to get in the trade at the bottom of the bar and get out of the trade at the top of the bar while it's still in this congested triangle right here, while it's still jammed up in this space right here. There's enough room for a bar length in there, and that's all you need, right? One bar length. With a 19 range, it's just about enough to get the goal for the day with one bar length. Okay, so that's what you'd be looking for. Now, what I was trying to show you a minute ago was this. If we go here like this, and let's just go to a random spot like this, okay? Now, what you're interested in is when the blue gets into the overbought or the oversold without the black. Those are the spots you're interested in, right? So right here is one. right there really is 1. Right here is 1. And right there is 1. Right. This is one of those really close ones. I mean, that is probably okay anyway, but that one that just happened back there a minute ago is similar to that. But if you just look at these spaces right here, if you look at the really close ones, you include those two. And this is just a random spot. Now, what probably happened with price in here, you can kind of get an idea of what it probably did based upon what this did. So if you can figure that out without looking at price, then you should know what to expect out of price when it does give you this situation, right? So right here, price went up. It got up to some point, then it dropped down. And it looks like it was a pretty quick drop. It probably went in and put an overswing. Then it pulled back pretty quick and it dropped down again. The next leg length was probably about the same as that leg length. This is what it looks like, okay? Then it pulled back again, and the pullback was pretty good. It probably got up pretty close to the prior swing high, and then went sideways a little while. Well, chopped around a little while. And then it made the leg down, maybe not putting in a lower swing right here. And then you get another pullback up. That looks like it's pretty good, and probably put it in a higher swing, then put it in a lower swing. So you're probably in some chop right through here, right? Now in here is where you have your trades, right? Right here, well, I kind of drew it wrong, but right here you'd have a buy right there. You'd have a buy right here. Obviously I drew it wrong, but the buy would be in here, the buy would be in here, and the sell would be up here. Now the only other sell that you have is right in here. All right, you have a sell right in here in this area, and then you have one more buy back in this area. So I don't know what price actually did, but if we slide it down like this, we'll crunch it up and we'll see. So price moved up right here. This one right here, you didn't get the buy, it went sideways up here. So this one right here, the first one would have stopped you out. Then it moved down, you had the open right here. So you had it right there, you got your money back right there. Then you had a pullback here with another buy. You didn't have a short right there because you didn't come out of you didn't have any separation. But you had another buy right here. Right here, this is this one that I tried to do. So you had that right there. We made some good money on that move up. These are 19 tick range bars. You made about 30 ticks right there. Okay. Then it pulled back again. This is what it's showing here. It pulled back again, went sideways. This is the sideways stuff that I was trying to illustrate right here. Went sideways and then it went down and then it popped back up. And from the up spot right here, well, it didn't give you a trade set because you didn't have the separation in here, but it pulled back down and you had the opportunity right here at the open of this bar to take 20 ticks on the way back up. Okay. That was like right in here. And then this one right here was your sell opportunity from this right here. That would have stopped you out. Okay. And then you had another buy opportunity right in here. And if you bought the open of this bar, you had room for the stop. The stop would have been down here somewhere. So you had room for that to pull back and run into profit. You see that? Okay, David. But you see it, right? And right in here is another spot. You get into the overbought. You're selling the open of the bar after you close up there in the overbought. Right? Right over here, you're selling the open of the bar after you close up there in the overbought. Okay. Oops, I didn't mean to do that. But you see what I'm talking about, right? You all see what I'm talking about. You can go anywhere in price and find that same kind of behavior. Like right here, you have the separation. So you're not going to be looking for a short trade right here. You're going to be looking for an opportunity to go long right now. That's the way it's coming together. If you were to get a down close on this bar, this is the triangle that I had drawn in for you a few minutes ago. You're at the top of the triangle right now. And if this bar closes down, well, you'll be down in the middle of it. And you'll have an opportunity to go long to get back up to the top of it. If you get rid of everything else that's on here, you're just looking at what's happening within each bar. So instead of taking your cue from price, instead of relying on the price action and price to give you the confirmation of the trade, you're relying on the oscillators, completely on the oscillators to give you the confirmation to take the trade. And this is happening before the price is moving. Okay. Now, that's not to say that this is leading price. It never leads price, but it illustrates, it is able to capture the past movements in a way such that it can let you know when that pattern is likely to repeat again. Okay. Now we didn't get a down close here, so we didn't get the separation we were looking for, so we didn't end up with a trade here. And this is the Russell. We didn't end up with the trade. So we can go to another market here and see. We almost have it right here. If we get a down close on this bar on the NQ, we'd have it over here right now. You can sell right here on the gold. Okay, right now on the gold, you can sell where it is right there. Okay, and I'm trying to. I'm at 8.7, and this doesn't fill me. This doesn't fill me. This doesn't fill me. This doesn't fill me. I could jump in at 8.6. There we go. Okay, I'm filled at 8.7. Right now, the entry point was right here at 8.6. That was the open of the bar. This is a separation. Now it's continued up a little bit right here, but what I'm expecting it's going to do is turn down. And this is a 9 range. So 2 bar lengths down from here would be 18 ticks down from here. Okay. The swing low is down here at 6.9. That's 17 ticks down from there, I think. That's exactly what you would expect out of the trade, right? So you just wait. You wait it out. The stop is in the same place as it always would be with a 9 tick range. I have a 15 tick stop. I should have a 15 tick stop. I don't think that's 15. That's 15. Is it? No, that's 16. It was 15. Okay, so I have a 15 tick stop on with a 9 tick range. So that's all you have to do. That's exactly what you want right there. The NQ's got a let's get a little tiny bit of separation here on the NQ. Right, just a tiny bit of separation there. But the good thing about the tiny bit of separation like this is it usually means that you've lost all the momentum on the upside. Okay. Let me see what is going on in here. PM. 2 chart on TradingView. You can go right now on the TradingView out to the trade rules page. If you have Essential, you can go to the trade rules page and click on this one right here, Essential Users. I fix that up so it works. If you just click on that, let's get everything down here at the bottom all set up. All right, you're gonna want to hit, when you get one of these things on the range trigger, you're gonna want to hit that to give you the latest version. That will have the box in it, the blackout box, if you want to have that. Okay. So I guess I should just copy this link right here, and I can paste it over here. Paste, thing like that. There. All right. Sorry, somebody had private messaged me for that. So we'll go back here. What time is it? It's 1:28. So I'm going to wrap this up here in just a few minutes. The NQ, like I said, had this open right here, was an opportunity to short. There's just a tiny bit of separation. When you get a tiny bit of separation like that, that was something that one of the guys asked me this morning. I think Ronnie asked me that this morning. What if they're both up there at the top? If they both end up at the top? Usually when that happens and you have a tiny bit of separation like this, you're not going to have the momentum going in the other direction. Okay. So this is starting to come together. Now this short here and this short over here are both starting to come together. Okay, so the NQ, I'll bring that one over too. The NQ, let's go to break even on that. And the gold still hasn't moved all the way down yet, but we've got a good entry on the gold. And did I get a good entry on the gold? It should have been the open of this bar. Yeah, it was. Okay. Oh, the gold still hasn't moved down. We got, we got 1 tick better than the open of that bar on our entry on that. And the NQ is it's just about to get my 48 ticks right there. There it is. All 48 ticks on the NQ. So you've watched me make over $5,000 sitting here. So if you are not doing this, then you are not serious. gold is now coming around. Okay, I have not had an opportunity to run the stop to break even on the gold. I need to have 5 ticks in profit on the gold to run that stop to break even. Okay. All right. Well, it's 1:30, so I got to wrap this up.
Okay.
All right, you are back. Okay, good. All right. Yeah, something happened that I don't know. Jada said we have to talk. It's not going well, and I have to talk. So she wants me to go to the hospital anyway.
Yeah,
so,
I can grab it right now if you're ready.
Okay. Yeah, I'm ready. Let me just show everybody how to take the free trial one more time. Okay, anybody that's watching on YouTube, if you haven't taken the free trial, all you need to do is go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. Click on that. It's going to bring you to this registration page. Just fill out the registration page. Take 30 seconds or less. Right? Do that, and you should be golden. Right? And that is it. Right. With that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am. Recap of the morning session.
Today it took 6 minutes and 1 trade to make $2,880.
Good job.
Thank you. Thank you. And the gold is back at break even right now. It's about to go to the point where I'm going to bump the stop and then I'm going to finish out this trade and go. All right. That's it, guys. Thank you all for coming. And I am bumping the stop to break even right now on that gold. Thank you all. And I'll talk to you later. I'll let you know what's going on, D.
Okay. All right. Keep me posted. All right. Guys, we made it through all the markets. We went through all the logic alerts, concierge trade alerts. We did everything we do every day. One last thing. Our good word for the day. Today's topic is you're called by his marvelous grace. Galatians 1:15. God chose me and called me by his marvelous grace. In Scripture, you will notice that God usually called busy people. Moses the shepherd was busy tending his flock. Gideon the farmer was busy harvesting his crop. Peter and John the fishermen were busy mending their nets. But there was something inside each of them that responded to God's call. With God, availability matters more than ability. Imagine for a moment a farm worker named Saul out looking for his father's lost mules and returning home anointed to be Israel's first king. The story is in 1 Samuel 9:10. There's no telling what God will do with you. So be faithful and nurture the dream he put in your heart. And when the time is right, he will set everything in place. The psalmist said in Psalm 37:4, take delight in the Lord, and he will give you the desires of your heart. Now, I've heard that preached a few different ways. This is what I think is the right way. Okay? It says, take delight in the Lord, and he will give you the desires of your heart. Does that mean he's going to put a Mercedes in your driveway, and a yacht at the end of your pier? No. At least that's not how I preached it. The way I preached it was that if I take delight in the Lord, he will put desires, his desires, in my heart. Then I'm able to see the world through God's eyes. I become his hands and feet upon the earth. So the name it, claim it, prosperity gospel that was so popular back in the 80s, they took that scripture and they twisted it 9 ways to Sunday. I do believe with all my heart, the way I just explained it, that's the truth. So, don't be impatient. If God put the desire in your heart, he'll provide everything needed to bring it to pass. Jesus said in John 6:63, the Spirit is the one who gives life. The flesh doesn't help at all. The words that I have spoken to you are spirit and are life. So water your vision with God's Word and spend time with Him in prayer. And if anyone tries to come between you and what God has called you to do, tell them, sorry, I have to go. I'm already spoken for. My destiny is too important to miss. Don't waste another day struggling with God's call on your life. Just surrender. He didn't call you because of your great track record, your great intellect. The Bible says, where sin abounded, grace did much more abound. Romans 5:20. So the bottom line, friend, is you are called by His marvelous grace. Let Him put His desires in your heart. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell. And there we go again. What up? Love you.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.